Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, and thank you for being here. Thank you for being back. If this is your first time, welcome to the podcast. If you guys are consistent listeners and you like the podcast, please go in and give it a review, leave a comment. I prefer 5 stars, but I'm not going to tell you what to do. Anyway, let us get into it today. We are going to go back to Nelson's book. I haven't been there in a while. I was starting to do a book review, or I do have lots of book reviews out there for every chapter, and I have not touched this one in a while. I don't know why. I've just had other stuff to talk about. So we are on the chapter and even distribution of age classes, and that is page 71 of Becoming Your Own Banker. Now, I actually talk about this a lot with my clients, and Nelson has it in the book. I have a podcast that is called Generational Wealth, and you can find that on my website, farmingwithoutthebank.com, and you can go to the blogs and you can go to Generational Wealth. That is going to take you to a video, and it's going to actually show you what happens when we buy life insurance on every generation and start passing things down. Now, Nelson goes a little bit deeper than that in this chapter. First of all, he starts this chapter with Proverbs 13:22. A good man leaves an inheritance for his children's children. In the world of farming, we tend to think we don't need to leave anything to anybody because we struggled really, really hard to get here. And those kids, if we just leave them anything, they're just gonna, down their leg. Well, excuse me? Really? Does everybody need to struggle because you struggled? What in the world is wrong with that? I mean, I just don't get it. If you don't trust your kids to handle what you've left them, then maybe we need to look at ourselves and say, what did we do wrong? Did we not teach them something that they should have learned? No, I get it. Not every kid is going to listen. Totally understand. Not every kid is going to turn out how we've raised them to. We're always going to have one rebel in the group. But at the end of the day, you raise them. If they don't understand what you want done with what you leave them or what your wishes would be, did you even tell them what they are? Or did you assume that they're supposed to know? There is nothing wrong with leaving something to the next generation. And I ask this all the time. You get up every day and you work really, really hard to build your operation, but you're not doing anything to protect it? Why do you get up every day to build it? If you don't plan to leave it, if you don't plan to do any sort of estate planning, why do you keep getting up to do it? Why do you keep building? Why do you keep buying land? Why do you keep buying cows? Why do you keep adding to things? Why don't you just stop where you're at? I don't know who you're building it for. Yourself? Great. Good for you. But if you're not building it for somebody else and you're 75 years old, 80, what are you doing? Probably not listening to this podcast. Right? So the beginning of this chapter, Nelson talks about in his forestry days, how they would plant trees so that for 40 years they had trees that were growing, and then they were harvesting sections of that whole crop. Okay, so I've talked to a few people that have timber. They're never just straight up timber growers. They're always farmers with timber. But it makes sense when they harvest and they plant and they thin and then they replant, right? So what Nelson is saying in here is just like that, we should be starting policies on generations. So when we get 2 generations, 3 generations, 4 generations, 5 generations, every single one of those generations has life insurance. So in his book, he is saying that grandpa and grandma should be buying policies on the grandkids. And we should constantly be doing that. So they're going to skip a generation. They're going to skip their kids because if they're just finding out about this and you're in your 60s, well, maybe you want to insure your grandkids. And it's not just that easy to do either. But the moral of the story of what Nelson is saying here is every single generation needs to have life insurance on them. And every time that we do that, we discount that dollar even further. Because when we're buying life insurance on a child versus a 60-year-old, the cost is significantly different. Now, don't misunderstand this. A lot of people say, well, then I should be buying it on the grandchild instead of myself. No. There are limits to how much a kid can have. The kid's policy cannot be structured the same way that an adult's policy can be structured. So there are some limits, but that doesn't mean that we shouldn't be buying insurance on them. And just like in my blog post, when I go over the numbers, you see that if we have death benefit from the very first person that has life insurance, which is where I'm going to call the senior of the family, right? So when that 80-year-old passes away and we use that money to buy life insurance on the next generation, and then we use their death benefit to buy life insurance on the following generation, it's massive. We were down to 18 cents on the dollar. Now think about what we can do is if we don't wait for somebody to pass away to buy life insurance on someone else. Huge. I have not seen proof of this, but a lot of people talk about the fact that this is what the Rockefellers do. They will have life insurance on every single person in the family. When that person passes away, the money goes back into the trust. Everybody in the Rockefeller family apparently goes to this trust and they're borrowing money and they're utilizing the money within the family. They're not having to leave the family. So if we want to leave generations better and we want to truly have a family banking system, this is how we need to do it. We need to be buying life insurance on every single person in the family. I have an individual that I visited with just recently, and grandpa passed away and left some money to the grandchild. So the grandchild can take her inheritance and turn it 20 times what she inherited for her kids. The grandkids will get 20 times what she inherited when she passes away. That's absolutely crazy. You show me something else that could do that. I don't know what it is. If it's land, well, we could be getting rid of the step-up in basis. Government is apparently controlling that too, right? And always has. So what else is going to leave us 20 times? The other family members that are going to be receiving inheritance are going to do what with it? Put it into some kind of trust that's tied to the stock market. Oh, they're going to be living high off the hog off of interest is what they think. And then they're going to leave their heirs supposedly the same amount of money that they inherited. So their kids get the same amount, her kids are going to get 20 times? What? Who's winning here? We have to be super smart about how we're going to create the family banking system, which is what Nelson is talking about in this chapter. I have many clients that say, well, a kid's policy just isn't as good as an adult's policy for cash value. So we're just going to wait till they're 18. That's fine. But go back to my podcast talking about buying life insurance on children. It's not that easy to just wait till they're 18. I wish it was, but it's just not that easy. Nelson says there are significant advantages to this plan. Covers multiple generations, long-range planning. Long-range planning. This is not a short view of things. Everybody wants to know, well, what am I going to have next year? What am I going to have? What kind of rate of return am I going to have in 2 or 3 years? Long-term thinking, right? If you can't think long-term, if you can't think maybe past your generation, then this probably isn't the concept for you. Underwriting problems are minimized, meaning as long as we are healthy, we can get life insurance. You guys, you would not believe the amount of children I see uninsurable, the amount of young people that are uninsurable. If we are insuring people when they are babies and healthy, we minimize the fact that they might be uninsurable later in life. Tax-free buildup of cash values, which we all know about, right? Outlay is very small compared to ultimate yield. That is what I was talking about when I said in my blog post, at the end of the third generation, we're paying 18 cents for every dollar of death benefit. The outlay is very minimal to what we are going to have as a yield. Generations paying the premiums can most easily afford them, meaning grandpa and grandma can most likely afford something on the grandkids. And they don't have to be big policies. When death benefits occur, the system becomes self-sustaining. What does that mean? We have death benefit that can then go to purchase more life insurance or go to pay the life insurance policies that were already started. Precludes any need for Social Security. This is kind of a funny one because Nelson did not like Social Security. In fact, from last I heard, he didn't even cash any of his Social Security checks. He did say that he called Social Security and said, I don't want it, and they wouldn't keep it. Because Nelson said, forget it. I don't want your stinking Social Security. Estate planning is greatly simplified. Oh my gosh, yes. Estate planning is actually done. It's done. Like, you have to do some estate planning, but it makes it a heck of a lot easier to do estate planning when we wrap in some good death benefit. And I am saying good death benefit because not all life insurance is good for estate planning. I have some existing clients that I started their stuff in 2017. Dad just passed away, I want to say a couple months ago. I forget when he passed. I did not have life insurance on Dad. They came to me and they had universal life insurance on him already. I asked for an in-force illustration. The in-force illustration said that Dad's policy is going to collapse at 76 on the guaranteed side of this UL. The non-guaranteed side said it should go to age 100 and something. The policy, Dad passes away at 79 years old. The life insurance agent comes to them and says, you guys are kind of lucky he passed away at 79. His policy was going to collapse next year. I said, no, you guys aren't lucky. The life insurance agent is lucky because where was he to warn you of this? He was not going to say anything. He was not going to tell you anything. If he knew this, did he just know this by happen chance after the death claim had been put through? So what I seen from the company was 76. He dies at 79, so it went 3 years longer than what was guaranteed illustrated, but nowhere near how it was sold to them that it was going to go to age 100. Nowhere near, because I think it actually went to age 109 or 110, because I've never seen that before. It's usually 100 or 121. That's insane. Absolutely insane. That policy, this is even better. That policy was only 7 years old. It's not like they had that policy for 20 years. It was 7 years old and still sold to them incorrectly. This is a good one too that Nelson says, advantages. Wealth mentality is transferred to succeeding generations over a long period of time to produce consistent understanding. They are learning a process, not buying a product. This is so huge. We are passing on a wealth mentality versus, oh, all you're going to do is be broke. You're barely going to get by. You're going to live paycheck to paycheck. You have to scramble. Right? That's the mentality we're passing on to our kids right now. Is life is hard and it should be hard and it's always going to be hard. What? That's what we were told, right? Most of us, that's what we were told. No, it doesn't have to be hard. It's hard because you believe it's hard, but look at wealthy people. They think differently. They act differently. It's not because they're hoity-toity. I've learned this by hanging out with wealthy people. It's because they grew up with a different thought process. They've developed a different thought process. If our family can understand, if we can leave them wealth and then teach them how to manage the wealth, you can still be good people. You can still be wealthy. Awesome. And it promotes the understanding of what stewardship is all about. Oh my gosh, right? If we have a little bit of extra money, can we do awesome things? Yes, we can. He says, money won't buy happiness, but poor stewardship of money will steal happiness. And I have a note in my book from our book study that says, people without money have different problems. And it's funny when people say to me, well, Mary Jo, you know, you're doing really well, but I wouldn't want what you have. Really? Because my challenges are just challenges. If you don't have money, you have challenges as well. And I think I have the quote in my book that says, only people that think more about money are the people without money, right? Because without it, all we're worried about is how we're going to pay our next bill. All we're worried about is what we can't do because we don't have the money, what we can't buy because we don't have the money. Leaving an inheritance, preparing the inheritance, preparing an estate is not a bad thing. It means that you care. It doesn't mean that you have to leave it to everybody, because there might be that one child that just doesn't quite get it, but it does not mean that you don't have to do it or you shouldn't do it. As a parent, it is your responsibility to also be teaching the next generation stewardship of money. It is not the school's responsibility to teach this. I love this when people say, well, it's the school's responsibility to be teaching our kids how to use money. You want our government school systems who can't even manage their own money to teach our kids about money? What? My daughter took a finance class this year and was learning about money from a student teacher who complained that he wasn't getting paid enough. That's who was teaching her a finance class? That's who was teaching her how to manage money and how to make money? Somebody that complained he wasn't getting paid enough? Then quit your job and go get a job that pays more and do something else that pays more. But this is what my daughter learned. I think we can leave that better set to mom and dad, right? It's like going to college and learning business from somebody that's never had a business. I don't get that. Oh, I'm going to go to college and I'm going to get my business degree, which I have, by the way. I'm going to go to college and I'm going to get my business degree so I can learn how to run a business from somebody that's never run a business, that's been a professor forever. And they've read some books about business, but they've never actually run a business. They've never had employees. They've never had to pay unemployment taxes. They've never had to deal with conflict. Yes, this person is going to tell me how to run a business. They've never had to do any marketing. Guess what? I didn't learn how to run a business by getting my business degree. I learned how to run a business because I have business coaches. Oh, what are these business coaches? People that have done it. Who is best to learn how to handle money from? Somebody that's done it. And it's not going to be our government school system. And mom and dad, you better figure out how you are managing your money and what you're going to learn and pass off. I have a client that has, I believe they have 6 children. Every single one of those kids, all the way down to the 8-year-old, sat in a meeting with me and learned about why they are all starting their own policies. Every one of them, all the way from the 19-year-old, all the way down to the 8-year-old. I believe that was their ages. I would have to look to be certain. The whole family, mom and dad, the whole family sat with me. I went through every child and what their policy was going to look like. And when the oldest got done, he left. Then the next one left. And I got all the way down to the 8-year-old, and he sat at that table and listened with mom and dad. And we just talked to him the other day. My assistant called to see how everything is going. And he said, we are having the kids read the books again so that they continually understand why they're doing what they're doing. Reading the books again. Talk about a family teaching financial responsibility. It is our responsibility to teach that to the kids, not somebody else's. And if the kids don't want to learn this, then they shouldn't get anything. If they don't want to partake in any of this, then they're just telling us exactly how they feel, right? Well, if we've worked really hard to build it and they don't want to partake in any of these conversations, then do we need to leave anything? Do we need to leave as much? These are huge, huge things. And when we want to talk about generational wealth, we want to talk about leaving an inheritance. That is exactly what Nelson is talking about in this chapter. Chew on that for a few minutes. If you have not gotten Nelson's book, Becoming Your Own Banker, you can do that on my website, farmingwithoutthebank.com. You can go there. You can grab his book. He also has his book on audio, but you have to get that off of his website, which is infinitebanking.org. And you can go there and get his audio book. You guys, this book is awesome. It is where I learn from. And every single time I read it, I am reminded of something different I didn't see the time before, and I have been doing this for 11 years. You're not going to know this by reading my book once. If you are reading my book, read it more than once. I also have mine on audio. Listen to it more than once. Somebody told me the other day that they really like my Life Without the Bank book because it's more detailed. I don't know what that means. They are very similar books. I do go over more of the stock market stuff in that book. So maybe that's what they meant. But it may not hurt to be reading both or looking at both, because there might be something said differently in Life Without the Bank than Farming Without the Bank that just resonates and makes sense. It is not hurt to keep educating yourself, because you are always going to hear something different. That's all I have for this podcast. If you guys want to hear something specific, let me know. Email me, maryjo@withoutthebank.com, and I am happy to have a podcast on that. Otherwise, you have an absolutely fantastic rest of your week, and we will catch you in the next podcast.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.